Well, what we do see in these earnings results is that we are in a recession. And we've been calling for a recession for quite some time, a lot of it based on excess inventory. So we think this is an inventory-led recession. And I think that's coming through loud and clear. We're seeing advertisers cut back dramatically. It seems like when Walmart and Target announced in May that they were loaded up with inventories, and this was far above what they had expected, and that they were going to have to do something about it. You know, a lot of advertisers started cutting back, cutting budget, saying, "Okay, this is a possible recession indicator." And as you know, we've just gotten 2 quarters, consecutive quarters of negative real GDP growth, but a lot of people still are fighting the notion that we're in a recession.
Even as concerns of a potential economic recession loom over the markets, the cryptocurrency space appears relatively less volatile. Interestingly, the White House had, in a blog last week, discussed what exactly is the official definition of recession. It is unlikely that the recent decline could mean we are in a recession, it said. And this brings to the question as to how would Bitcoin perform if the economy were to enter a recession in the future? Hello and welcome to Money Talks. In today's video, ARK Invest CEO and CIO Cathie Wood updates about the fears of looming recession, negative GDP growth, and where she's looking for opportunity in tech stocks. Make sure to stick around till the end of the video where Cathie Wood shares her most recent outlook on economic downfall and where she is investing in these times. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any more time, let's dive right into the video.
Yeah, I think this is a recession. And I think what the Fed is really focused on is employment as a gauge. Employment is a lagging indicator. The CPI, the PPI, all of those are lagging indicators. If you look at initial unemployment insurance claims, they're up 50% from the low. So I do believe we're going to see some significant disappointment in the employment numbers moving ahead. And I also think, based on what we're seeing from gold, the gold price actually peaked in August of 2020. Many people don't know that. And it's down near the low end of a range, a 2-year range. That's an important inflation gauge. And then copper price. The copper price broke down. It broke a 1-year trading range in the $4 to $5 per pound range. And it has come down hard. So I think all of these are signals that that inflation is going to come down. It's going to come down significantly, and that we're probably going to see some deflation. And we've been calling for that for quite some time as well.
One of the most well-known names in the investing world today is Cathie Wood, and she rose to prominence in 2020 after her flagship fund, ARK Innovation ETF, jumped over 157% for the full year. Wood's massive bets on stocks such as Tesla and Zoom led to ARK far outperforming the market in the early months of the pandemic, and her returns gained her a cult-like following among both professional and amateur investors. Now, Cathie Wood may have given the best tidings the market may have been hoping for. In an interview with CNBC, Wood said the fund's ARK Innovation ETF bottomed on an intraday basis on May 12th, and this may be a signal that the market may be turning the corner, she added. She also noted that growth stocks typically outperform as a bear market approaches its end.
Well, typically growth stocks will outperform as we move towards the end of a bear market and an end of a recession, because they're the new leadership. As inflation and interest rates were going up, we were facing incredible headwinds. That started in February of 21. And it looks like, at least so far, that we bottomed on an intraday basis based on our flagship strategy on May 12th. And we actually bottomed before the NASDAQ and the S&P did. The S&P broke down to new lows after that. So that was an early signal that we might be turning the corner here.
Data from the United States Commerce Department suggests America has entered a technical recession, but market analysts have highlighted key metrics that suggest investors are optimistic. The American economy shrunk for the second consecutive quarter, according to government data released on Thursday, fitting the criteria for a technical recession. The Biden administration maintains that the U.S. is not in a recession, highlighting low unemployment rates and other metrics that counter the argument. Many experts attribute this move to the U.S. Federal Reserve's decision to raise interest rates by 0.7%, which saw cryptocurrencies markets outperform stocks, with Ethereum surging 5% immediately after the announcement. Other experts also conceded that the current unemployment rate was extremely low when compared to other periods of recession, but was not convinced that this was enough to prove that the U.S. economy has not receded. This recession is interesting because it is not accompanied by high unemployment or a significant drop in consumer spending, but there's no denying that the GDP is falling and the Federal Reserve is successfully achieving their goal of destroying demand.
But I think to really turn the corner, the Fed does need to change its spots. It's getting all kinds of signals that it should, like an inverted yield curve. And yet, I think it's paying attention to lagging indicators of inflation, determined not to be blamed for letting the genie out of the bottle and causing another 70s-like inflation period.
The cryptocurrency market jumped following news that the U.S. economy shrank for the second straight quarter. Bitcoin is trending upward, currently trending at around 23,703. In the last 24 hours, the largest cryptocurrency by market value popped over 10%, reacting positively after the U.S. Federal Reserve raised interest rates on Wednesday. Ethereum is also in the green, up 16% in the same time frame. Ether is currently trading at around $17.25. Trading will continue to be range-bound, perhaps at a slightly higher range. Crypto is still going to be vulnerable to any sudden shifts in the macroeconomic and geopolitical landscape, which could lead to some downward moves well before the next Fed meeting. Amid all the macroeconomic hurdles and overall uncertainty due to serial crypto-related setbacks, Bitcoin too suffered in recent times. However, Bitcoin's decline in recent times is still not worse than some of the high-performance traditional assets. According to data from CryptoCompare, the Q2 of 2022 registered Bitcoin's second worst quarterly performance in its history. Despite such a bad performance during the period, Bitcoin trumped some of the big companies' stocks in the stock market. When compared with the company stocks of Peloton, Netflix, Roblox, and Snapchat, Bitcoin performed better in the first half of 2022. To an extent, this explains why some of the crypto supporters call Bitcoin recession-proof. However, macroeconomic events clearly continue to affect crypto prices from time to time. It remains to be seen if Bitcoin isolates itself from the macro links. During the period, Bitcoin witnessed a huge downturn in price. Bitcoin went from a high of over $47,000 at the start of 2022 to under $20,000 in June. Recently, the crypto asset suffered losses after Elon Musk's Tesla announced it sold 75% of its Bitcoin holdings. The holdings were sold to maintain overall liquidity for the company, it explained. However, Musk clarified that his company is open to increasing its Bitcoin holdings in the future. So, do you agree with Cathie Wood's approach towards recession? Let us know in the comments down below. Also, don't forget to like and subscribe. We'll see you soon with the next video, and thanks so much for watching.